Corn and wheat continued to slide on Wednesday. Everything else pretty much saw a recovery. Joining us to visit about that, Jim McCormick with agmarket.net. A wheat and corn market down again on Wednesday, pretty hard in the wheat market, and traders seem to be buying into this idea that Russia's actually going to allow exports of Ukrainian goods out of that country.
That's definitely what seems to be going on right now, Michelle. I think the traders are biting into this. I don't think it's going to happen. It's a little bit of deja vu from earlier in the year. Remember, before Putin invaded the Ukraine, you saw a lot of European leaders going over there, talking to him, and then they come back saying, hey, he says he's not going to invade. And sure as shoot, you know what happened? He invaded. Well, right now there's been a lot of talk, a lot of European leaders trying to get this grain corridor to allow up this old crop grain of roughly 25 million metric tons of grain out. I don't see that's going to happen because what Putin has said before is he wants a quid pro quo. In essence, if he's going to let the grain flow, he wants the U.S. as well as the rest of the world to remove those sanctions. And I just don't see that happening. The other problem you do have is even if they would agree to it, who's going to want to go into the middle of a war zone to load those boats? It's going to cost a fortune to insure that freight. And then on top of it, you got thousands of miles of roads as well as bridges blowing up. So just getting that grain to that port where it needs to unload could also be a problem. So we just don't see it's going to happen. So don't be surprised here in a week, 10 days, if we get news that, wait, this whole deal fell through, and then we start putting some of this premium right back into the market.
So is the wheat rally that we've had here over for good now, do you think? Or are we in an environment where key reversals from a couple weeks ago and what's been happening with fund liquidation don't matter?
Well, I think right now, if you look at it, we're quite a couple dollars off the high, so it definitely looks a little bit negative. But the reality is the picture can change on a dime. I mean, we still got to harvest our crop at this point in time. The early results out of Texas are not all that impressive. We'll see what that does as we go through the rest of it. The spring crop is struggling to get planted both here as well as in Canada. And then lastly, the reality is, a lot's going to hinge on what does happen in the Ukraine. It's not just the crop from the old crop to get exported. It's also the new crop they're getting ready to harvest right now. And can they get that out? If you cannot get any of that grain out of the Ukraine because the war continues to rage in there, that's going to keep the world balance sheet incredibly tight, which could easily allow for the wheat market to make another substantial run higher. And if we have a drier summer situation form where the corn market catches a bid, that will also support the wheat a bit.
Even Minneapolis wheat, though, is kind of ignoring the amount of PP acres that we might see. And what's your estimate on what that number might be?
I wouldn't be surprised if you're going to see 1.5 million, both from the wheat and corn combined, if maybe a little bit more. We'll see how the weather plays out the next couple of weeks. I mean, right now they did get a lot of rain in that part of the world over the weekend, so they can't get in really quick. The PP, the prevent plant date has kicked in. So each day they don't plant, they're losing a little bit of their revenue of the crop insurance that they paid for. Eventually, I do think they're just going to throw in the towel and take the prevent plant. That will tighten the supply quite a bit potentially. And like I said, any kind of weather hiccup, not just here in the United States, but anywhere in the world, could easily put a bid back in the market unless that grain manages to come out of the Ukraine.
So did corn just follow wheat today?
Corn, I think, followed wheat a little bit today, but the other thing was the crop ratings, or the conditions, the planting pace, I guess I should say, pretty much caught us up. So when you look at the planting pace at face value, you're like, hey, wow, we caught up. So I think that added to the day's negative tone, as well as this, Russia or the Ukraine export story. But, it's something, Michelle, I think we also got to dig in a little bit. Look what's going on in North Dakota. 56% of that crop is planted. I don't think they're going to get it all planted. If you take 1 million acres off of the planted acres, drop it to 88.5 million acres, and you manage a trend yield of 177, your carryout's going to fall to about 1.2, maybe 1.25 if you keep demand unchanged. Now, I think the odds are demand could get a little bit higher based on the lack of grain coming out of the Ukraine, but I also think the reality is a 177 yield probably is not going to happen because of how late this crop is. I'm here in northern Illinois right now, and corn is barely out of the ground. So we are going to see a very late, pollination, which tends to be in the hotter, drier portions of the summer. If you drop that trend yield down to 172 with an 88.5 million planted acres, you're looking at a carryout closer to about 700 million. And remember, Michelle, just a couple of years ago, that carryout ended up being about 1.2 billion bushels, and we saw cash markets trade $1 to $2 over the board at the very end of the summer. So your pipeline is more 1 million, 1.2 million. So you cut your carryout projected to half of the carryout levels or pipeline levels. I think you could get a very explosive move this summer potentially.
So how much technical damage have we done to this market? Because we're below some key moving averages now.
We've definitely done some technical average. I mean, with this December corn closing below that 703 level, I think it's gonna, it could go down and try to test the 100-day moving average. The same thing for the July corn. So the technical picture definitely looks negative. We're probably gonna need a little bit of a fundamental story to change that dynamic, and that could happen quickly. If we get a headline tomorrow morning or coming out of the weekend, let's say, that says Putin is not going to allow grain out, that Russian embargo, in essence blocking ships from going in and out of port, is intact, don't be surprised to see the market go up. The other thing we're watching is the weather. The long-term forecasts all spring long have been that we're going to turn warmer and drier as we go to the latter half of June into July and August. If that would start to come into play, that could change the psychology of the market. And then lastly, China. We've been looking for China to become a buyer of corn. We haven't seen a lot of purchases recently, but they weren't able to get up to 6 million metric tons of corn they purchased out of Ukraine. If they'd come in and swoop in and buy some of this corn on this break, that could also change the dynamic of the market very quickly.
Now, mentioning China, they actually came in and bought some soybeans here this morning. So is that why soybeans were able to divorce themselves from the lower corn and wheat day, or was there more to it?
I think that was part of it. Seeing a little bit of demand is there, but I think the other thing we saw this last week. There was a fund in there that pretty much had been buying 2 contracts of corn and selling 1 contract of bean all spring long. He liquidated that position late last week, and that supported the beans up about 50 cents while corn is under pressure. It does look like we saw a little bit of wanting that spread again today, hence the little bit of strength we saw in the bean market on Wednesday in the corn under pressure.
But this bounce, we didn't see at least any follow-through selling. Does it mean that we negated yesterday's key reversals?
We have not negated yesterday's key reversal. I mean, we bounced, but we did not take out yesterday's highs. So, I mean, right now you could call it a corrective bounce at this point in time.
And did we see a corrective bounce in the cattle, or was there some other fundamentals pushing that market today?
I think on the cattle market, the first thing was definitely the cheaper grain prices. When you see the grain prices cheapen, you tend to draw some demand into it. The feeder cattle market definitely caught a bid on this cheaper grain prices. The other thing I think we are looking at, Michelle, right now is demand is still relatively strong, I think, on the consumer side of the end. I mean, you got to remember, we've been locked down for 2 years. And what we did for those 2 years is we were not experiencing life. We were pretty much living life through a video screen in a lot of cases, watching a lot of TV, spending time with our family. Well, after 2 years, everyone wants to go on vacation, it feels like. And when they go on vacation, they tend to go out to eat. They tend to go out and want to visit with their friends. So when you look at airlines, Delta Airlines saying their capacity is around 85%. So if you're on a flight right now, it is booked full. That's one thing to be positive about. The other thing is we've saved a lot of money during this pandemic. There was one estimate by one major bank that said consumers that had roughly $1,000 to $2,000 in their bank pre-pandemic, they got $5,000 in their bank right now. The consumer that had roughly $2,500 to $5,000 in the bank, they're saying he's got $15,000 stored up in his bank. So the consumers are a little bit stacked with some cash and reserves, and I think they're willing to spend it to go on vacation and hopefully spend it buying beef and going out to eat and helping support the cattle and livestock market.
Now, we've had some lower cash trade this week, and yesterday we did see new lows for the move on the charts in live cattle. Are those lows going to be able to hold?
I'm optimistic. We had a nice reversal today coming out. We got to get a little bit of follow through into the week, but I am a little bit optimistic that demand will hold. The one that we would need to help, I think would help a lot, was if you could see the gas price start to work back down. There's no doubt about it. The higher gas price is definitely a problem, but there are reports out yesterday that there is a decision possibly by the OPEC to essentially kick Russia out and then essentially increase production at OPEC. If you would start seeing that, that would probably trickle into the oil market, which trickle down to the gas market, which should help the consumer hopefully absorb a little bit cheaper energy, will allow them to spend a little bit more money on food.
So hogs pulled back yesterday on the risk-off day, but back today, corrective in nature, or are we continuing to try to get pushed here a little bit by this better cash trade?
A little bit of cash trade, I think, is going on. The other thing, seasonally, this market tends to work higher. So it's like the cattle market. We saw a good trade today, but we need to get a little bit of follow through in it. But definitely, you got to be a little bit more optimistic with today's action compared to the other days.
Do you see a lot more upside in the hog market or not?
I think it's going to struggle a little bit at this point in time, but in general, I think you got to be a little bit friendly. In the long run, we are seeing a contraction in the size of the protein market right now. The hog herd, you look at it right now, it costs a fortune to expand right now. Labor is impossible to hire. So I think in the long run, you're going to see the beef market as well as the hog market work higher as the supply continues to contract, as well as the economy hopefully continues to strengthen.
Thanks so much for joining us for markets. Jim McCormick with agmarket.net.